Do you know the ARK ETF is a gambling den on innovation? Hey Chat ETF fam! Welcome back to the channel. Today we're diving deep into the ARKK ETF, an innovation-focused fund that's been making serious waves. But before you jump in, is ARKK a revolutionary goldmine or a risky roller coaster ride? We're breaking down everything you need to know. We'll see if it truly diversifies your portfolio, or if it just concentrates your risk. Plus, we'll compare ARKK to other options, and see if it offers unique exposure you can't get elsewhere. So buckle up, ETF enthusiasts, because we're about to get schooled on ARKK. Question 1. What is ARKK ETF? The ARKK Innovation ETF, ARKK, is an actively managed exchange-traded fund, ETF, focused on companies positioned to benefit from disruptive innovation. Let's break that down. Exchange-traded fund, ETF. Imagine a basket containing various company stocks. An ETF trades like a single stock on a stock exchange, but provides exposure to multiple companies within a specific theme or sector. ARKK offers a convenient way to invest in a variety of innovative companies without having to pick them yourself. Actively managed, unlike some ETFs that passively track an index, ARKK is actively managed by ARK Investment. A team of analysts researches and selects companies they believe will be at the forefront of disruptive innovation. This approach can potentially lead to higher returns than passively tracking an index, but also carries the risk of underperforming if the managers make bad calls. Disruptive innovation. This is the core theme of ARKK. The fund invests in companies believed to be developing products or services that have the potential to significantly change the way we live and work. Examples of disruptive innovation might include fintech innovation. Companies revolutionizing financial services through technology, like mobile payments or online banking. Genomic innovation. Companies leveraging genomics, the study of genes, to develop new medical treatments or personalized medicine. Industrial innovation. Companies developing new technologies that are transforming traditional industries, like robotics or 3D printing. Next generation internet innovation. Companies building the future of the internet, like artificial intelligence or cloud computing. Question 2. What is the ARKK ETF's primary investment objective? The ARKK ETF's primary investment objective is to achieve long-term capital growth by investing in companies positioned for disruptive innovation. Here's a breakdown of this objective and its implications. Long-term capital growth. Unlike an ETF focused on dividends, ARKK isn't primarily concerned with generating regular income for investors. Instead, it aims to grow the overall value of the fund's holdings over an extended period. This means the fund might invest in companies that aren't currently profitable, but have the potential for significant future growth. Disruptive innovation. This is the key driver of ARKK's growth strategy. The fund targets companies at the forefront of technological advancements and paradigm shifts that have the potential to revolutionize entire industries. Examples include artificial intelligence, genomics, and autonomous vehicles. The focus on disruptive innovation comes with its own set of characteristics. High growth potential. Disruptive innovation often leads to rapid company growth, which translates to potentially significant increases in the value of the companies ARKK holds. This is the primary driver of long-term capital growth for the ETF. Higher risk. By their nature, companies involved in disruptive innovation are often unproven or operate in rapidly evolving fields. This inherent uncertainty translates to a higher risk of failure compared to established companies in traditional industries. Volatility. Due to the high growth potential and inherent risk associated with disruptive innovation, the price of ARKK can fluctuate more dramatically than some other investments. Investors should be prepared for significant swings in the ETF's value. In essence, ARKK prioritizes the potential for high future growth over factors like current profitability or low risk. Investors seeking long-term capital appreciation and comfortable with a higher risk tolerance might find ARKK suitable for their portfolio. Question 3. What is the underlying asset class of the ARKK ETF? The underlying asset class of the ARKK ETF is equity. Here's a breakdown of why. Equity represents ownership. An ETF holds a basket of underlying assets. In ARKK's case, these assets are primarily stocks, equities, of companies believed to be involved in disruptive innovation. When you buy a share of ARKK, you're indirectly purchasing ownership stakes, through the ETF, in these companies. Equity focus on growth. Since ARKK targets companies with high growth potential, it aligns more with the characteristics of equity as an asset class. Equities are known for their potential for capital appreciation, stock price increase, over the long term, but also carry the risk of price fluctuations. While equity is the dominant underlying asset class, there might be a minor presence of others. Limited cash holdings. ARKK might hold a small amount of cash to meet operational needs or for opportunistic investment purposes. Cash itself is considered a separate asset class with unique risk-return characteristics. However, the amount of cash is typically negligible compared to the equity holdings. Derivatives, potential. In some cases, ARKK might utilize derivatives for specific investment strategies. However, the ETF prospectus should disclose any use of derivatives and their intended purpose. It's important to note that derivatives themselves aren't a distinct asset class, but financial contracts linked to the performance of other underlying assets, which in this case would likely still be equities. Question 4. Does the ARKK ETF employ any quantitative investment strategies? ARKK ETF likely uses a blend of qualitative and quantitative analysis, with an emphasis on qualitative factors, when selecting companies for its holdings. Here's a breakdown of why. Focus on disruptive innovation. ARKK's core objective is to invest in companies driving disruptive innovation. This inherently involves evaluating factors that are difficult to quantify, such as the potential impact of a new technology. The company's ability to execute and become a leader in a nascent market. The overall market adoption and disruption potential of a new product or service. Qualitative analysis likely takes center stage. These factors require in-depth research, analysis of industry trends, and understanding the competitive landscape. This aligns more with qualitative analysis, which involves human judgment and interpretation of non-numerical data. Quantitative analysis might play a supporting role. While qualitative analysis is likely dominant, ARKK might still utilize some quantitative factors. Financial metrics like revenue growth rate or research and development, R&D, expenditure could be used to identify high-growth companies. Valuation metrics might be considered to ensure companies aren't excessively overvalued despite their growth potential. Question 5. How frequently does the ARKK ETF rebalance its portfolio? Unlike many ETFs that rebalance at predetermined intervals, ARKK, along with other actively managed ETFs by ARK Invest, doesn't have a set schedule for portfolio rebalancing. Here's a breakdown of how ARKK manages its holdings. Active management in play. ARK Invest, the advisor for ARKK, actively manages the ETF. This means they have the flexibility to buy and sell holdings throughout the trading day based on their ongoing research and analysis of disruptive innovation. Portfolio composition can change daily. Since ARK Invest can trade ARKK's holdings throughout the market hours, the specific companies and their weightings within the ETF can change daily. Focus on long-term strategy. while the holdings might fluctuate, ARK Invest likely rebalances based on their long-term vision of disruptive innovation themes rather than following a predetermined schedule. They might add new holdings they believe are well-positioned for future growth or trim existing holdings that don't seem to be aligning with their expectations. Question 6. What is the ARKK ETF sector allocation? The ARKK ETF allocates its holdings primarily across various technology and technology-enabled sectors, with a focus on disruptive innovation. Here's a breakdown of the sector allocation and what it means for the ETF. Technology focus: ARKK's core holdings lie within sectors positioned to benefit from disruptive technological advancements. This includes sectors like O. Technology services, e.g., cloud computing, software development. O. Health technology, e.g., genomics, telehealth. O. Consumer durables, e.g., electric vehicles, connected devices. O. Electronic technology, e.g., semiconductors, artificial intelligence hardware. Impact of sector allocation. Growth potential. The focus on technology-driven sectors positions ARKK to potentially benefit from high growth opportunities associated with disruptive innovation. These sectors often experience rapid advancements and market expansion, leading to potentially significant increases in the value of companies within the ETF. Higher risk. The emphasis on emerging technologies and growth-oriented companies also carries inherent risks. These sectors can be more volatile, and some companies might not achieve their full potential or even fail entirely. Limited diversification. Compared to a broad market ETF that invests across various sectors, ARKK's concentration on technology-related sectors can lead to less diversification. This means the ETF's performance is more heavily tied to the fortunes of these specific sectors. Question 7. Does the ARKK ETF invest in domestic or international markets? The ARKK ETF invests in both domestic and international markets. Here's a breakdown of its geographic reach. Global focus on disruptive innovation. ARKK isn't limited by geographical borders when searching for companies positioned for disruptive innovation. The fund can invest in companies listed on stock exchanges around the world. Focus on developed and emerging markets. While the specific holdings can change, ARKK typically invests in companies from developed markets, like the US, Japan, or Western Europe, and emerging markets, like China, India, or Brazil. Finding innovation wherever it exists. The core driver is finding companies at the forefront of disruptive innovation, regardless of their location. This global perspective allows ARKK to potentially capture growth opportunities across various regions. Benefits of a global reach. Diversification. By investing in both domestic and international markets, ARKK offers some level of diversification beyond just sector allocation. This can help mitigate risk to some extent, as economic downturns or regulatory changes might not affect all markets equally. Exposure to global innovation leaders. ARKK gains access to a wider pool of innovative companies, not just those limited to the US market. This can potentially enhance its long-term growth prospects. Question 8. Does the ARKK ETF use any leverage or derivatives? The ARKK ETF, ARKK, itself does not directly use leverage or derivatives in its core investment strategy. Here's why. Focus on stock ownership. ARKK primarily invests in company stocks, equities. Leverage involves borrowing money to amplify returns, while derivatives are financial contracts linked to the performance of underlying assets. These strategies aren't part of ARKK's core approach. Achieving growth through stock selection. ARKK aims to achieve long-term capital growth by actively selecting companies believed to be at the forefront of disruptive innovation. The fund managers rely on their research and analysis to identify these companies, rather than using leverage or derivatives. Transparency in filings. Prospectus review. While ARKK doesn't employ leverage or derivatives directly, it's always a good practice to check the official prospectus for any potential usage. The prospectus is a legal document that outlines the ETF's investment strategy and risks. Important distinction. Possible indirect exposure. There's a slight nuance to consider. Some of the companies that ARKK invests in might utilize leverage or derivatives as part of their own financial strategies. However, this indirect exposure is through the underlying holdings, not through any actions taken by ARKK itself. Question 9. How has the ARKK ETF performed in different market conditions? ARKK ETF's performance has been highly dependent on market conditions, particularly those affecting growth stocks and technology sectors. Here's a breakdown of how ARKK has behaved in different market environments. Bull markets, rising stock prices. Strong performance potential. During bull markets, where stock prices generally rise, ARKK has historically thrived. Its focus on disruptive innovation and high-growth companies can lead to significant gains as investor sentiment favors these sectors. Example: from 2017 to 2021, ARKK experienced tremendous growth, exceeding the performance of the broader market due to its holdings in companies at the forefront of technological advancements. Bear markets, falling stock prices. Heightened vulnerability. In bear markets, where stock prices decline across the board, ARKK can be more vulnerable due to its emphasis on growth stocks. These stocks tend to experience sharper declines compared to more established companies during downturns. Example: in 2022, when the broader market experienced a correction, ARKK's value fell significantly as some of its high-growth holdings faced sell-offs. Market volatility. Amplified swings. ARKK's focus on disruptive innovation often leads to a more volatile ride for investors. The inherent uncertainty surrounding these companies and their technologies can cause the ETF's price to fluctuate more dramatically than the broader market, both upwards and downwards. Factors affecting performance. Interest rates. Rising interest rates can dampen investor enthusiasm for growth stocks, potentially hindering ARKK's performance. This is because higher rates make future earnings of growth companies, typically valued based on future potential, less attractive compared to the guaranteed returns offered by bonds. Sector performance. ARKK's performance is also tied to the specific sectors its holdings reside in. If there's a downturn in technology or innovation-driven sectors, it can disproportionately impact the ETF's value.